Hi there, welcome to another episode of UK Front Row Seat, where we are monitoring the inflationary collapse of the UK economy. This is episode number 4. It's all about financial repression. What is it? Why is it important? Why you need to know about it? Before we go into the detail, I just want to upfront say this is the call to action for all you out there with these videos in this series. Number 1, first of all, watch episode 1. That's just an introduction, gives you a good foundation of what we're doing here on this channel. The consistent message is basically to plan ahead, get your wealth out of the existing system. Banks will fail again. Buy gold, buy silver, physical metal, coins, bullion, whatever you can get your hands on at the moment. It's running out, there's a shortage. Keep it stored outside of the banking system. Also, look at prepping in order to survive the hardship that's to come. Create a support network of family, friends, associates, neighbours, and keep abreast of current news and events. Watching this channel will help. Okay, I found this pretty funny. Recent news from the Bank of England. There was an interview with Mr. Bailey, who is basically head of the BOE. He said that the bank will not print money to help directly fund government spending to mitigate the impact of coronavirus. He said, quote, "Using monetary financing would damage credibility on controlling inflation. It would also ultimately result in an unsustainable central bank balance sheet." So they know what happens. It's not as if they're clueless and they don't know what's going on. They know what they're doing. Everything is planned. This is basically just lip service. They still printed £645 billion in the face of the coronavirus pandemic to essentially buy government bonds anyway, just indirectly through the financial system. It's just farcical. He stressed, "They are not abandoning the long-standing concerns of central bankers about monetary financing." Yeah, right, because history tells us where that leads. Well, yeah, there's lots of cases, as you know, of hyperinflation around the world, and basically he knows about all that stuff. Obviously, he's the head of central bank, he knows all this stuff. Look, essentially, debt directly financing the government is going to be coming in the future at some point. So this is just him kind of trying to appease the masses, saying, don't worry, we know what we're doing. We're not going to go down that rabbit hole of direct monetization of government debt. Well, yeah, we'll see what happens in the future. Okay, so at the moment, the central bank, the Bank of England, is financially repressing us in 2 main ways. 1, debt monetization, and 2, ZIRP and NIRP, so zero interest rate policies and even negative interest rate policy. Okay, so what is debt monetization? Remember, this is all at a high level. Take the terms that I'm using here, Google them in your own time and find out more about them, learn about them in more depth. So basically, due to debt saturation in our economy in the UK, no one can take on any more debt. It's reached its limit. The Bank of England has to expand its balance sheet with QE, quantitative easing, which is basically just money printing. This is to avoid deflation and the death of the existing system, as I briefly alluded to in episode 1. So quantitative easing or money printing basically means that the Bank of England are just creating currency out of nothing to purchase government bonds indirectly from the financial sector. And as I was just saying with that piece of news from Mr. Bailey, and soon directly from the Treasury, which is modern monetary theory. So essentially that's just direct debt monetization. That's really bad. They're doing that now in the States. And as you can see from this infographic, the Bank of England are consistently buying UK government debt. The trend is up. That just basically means they're printing more and more and more and more money. Okay, so why do they monetize debt? Well, basically, if the Bank of England didn't buy government debt, the interest rates on that debt would be sky high because other people would have to be enticed to buy it with higher interest rates. Put it like this, why would I want to buy debt like a bond from the government if at some point it's either going to be inflated away, its value, or it's going to be defaulted on? I wouldn't. Therefore, I demand a much higher interest rate, so I would be rewarded for the risk I'm taking. Basically, if they didn't do this, the government would run out of money and the existing system would collapse. Well, it's collapsing anyway now. So anyway, Basically, what they're doing is they're creating fake demand to lower interest rates. And as you can see throughout history, the trend is down. Okay, so what's the impact of the money on the money supply? Well, obviously, if the Bank of England with their QE programs are printing more and more money, obviously the supply of money is increasing. This is evidently seen in this chart, which basically shows outstanding aggregate M4 currency supply. There's different M's of currency supply, M0, 1, 2, 3, 4. Again, Google to understand what they mean. The supply now is almost £2.5 trillion, but this is nothing. This will go much, much higher in the future as they print more and more money as they're caught in this death spiral. Also, I think you should Google the fractional reserve banking system. That was also explained in Mike Maloney's Hidden Series of Money, how that works, because that's also another way that money is introduced into the existing system out of thin air. Okay, so we've established basically that the Bank of England are printing loads and loads of money to prop up the government. What about the other side of things, the private sector, the everyday citizens? How are they being financially repressed in terms of ZERP and NERP? Given the economy is basically slowing down, freezing up, deflation, the Bank of England have to keep the base rate low to disincentivize saving and basically promote binging on cheap debt to keep the existing system propped up, kicking the can down the road, extracting every single last bit of juice. As you can see from the Bank of England base rate chart, it's gone down. It's basically 0% interest rates, which the bank rate is the determining factor of all the other rates in the economy. So now, because of this, we've got very high levels of debt to service mortgages, credit cards, vehicle financing, loan arrangements, student loans, etc. So everyone's taking on more and more debt as interest rates come down. That's what they want. They want to promote this to keep things moving. So as an example, you can see that credit card debt over time has greatly increased and it shows no signs of slowing down. Although, let's see what happens in the future, given what's happening around us. The flip side to these repressed interest rates are basically the destruction of savers and pensioners. Obviously, if there's no interest paid on savings, they're not getting any return. This basically, ZERP and NERP reward excessive risk-taking and it leads to misallocation of capital. If debt's cheap, well, yeah, I'll just go and borrow and do whatever I want with it because the interest rate payments are zero. Also, it results in capital flight from the banking system. So what's the point in keeping your money in the bank when I can do something with it elsewhere or just keep it as cash, especially if there's a risk of the banks failing? Therefore, tough controls have and are going to be continually put in place to avoid a run on the banks. This is really important, and that's why I'm saying get your money out of the system now, because of these controls that are going to be coming in at some point soon. Okay, so in summary, you've got financial repression made up of 1, money printing, debt monetization, essentially the central bank financing the government so it doesn't run out of money. Number 2, very low interest rates, either zero interest rate policy and in some cases negative interest rate policy, essentially forcing people to continue binging on debt to keep the system going, to keep kicking the can down the road. That's it in a nutshell. Look, I just wanted to finish off with something positive. It's very easy to get bogged down in all of the stuff going on in the financial world at the moment and the economy. So I thought I'd finish this video off with a thought for the day. It's by Anne Frank, this quote from the Diary of a Young Girl. Basically, she says, "I don't think of all the misery, but all of the beauty that still remains," which is very pertinent in the UK at the moment. It's springtime, all the flowers are blossoming, it's very beautiful. So if you can, get outside, get some fresh air and enjoy nature and take a break. Thank you very much. Look forward to speaking to you on the next episode of UK Front Row Seat. Hi everyone, I hope you're enjoying the video series so far. The next episode is going to be on inflation and money velocity, going over a few more infographics to explain things there. As you can see from the side here, I've just provided some links to the other videos. Also hit subscribe if you like my channel. Please share this video with your friends and family. Hit the like button. I look forward to seeing you again. Thank you.